Hi viewers, 11th Standard Accountancy, Chapter 13, Adjusting Entry for Interest on Capital. Interest on capital is an important concept of the accountancy. Okay, before that, what is meant by capital? Money or money's worth where is invested by the owners of the business is called as capital. According to the accounting rule, we have to look at that proprietor and the business both are two separate entities. He even clearly says, listen carefully, I am the business and I am also the owner of the business. So both business and the owner of the business both are separate business entity. So as a proprietor, I contributed 1 lakh rupees capital to business, and as a business I have provided 4% interest for contribution of the capital to the proprietor, which means I have take 4% on interest on capital from my business. Okay, so as for the business, interest on capital is the expenses. If the proprietor will take the interest for contribution of the capital. To know the true financial, why? Because to know the true financial status and also to know the real profitability of the business. The example is given here. The trial balance prepared on 31st December 2016 shows capital of rupees 5 lakh. Adjustment provide interest on capital at 4% per annum. Interest on capital, how we calculate interest on capital? From the capital only we have to take 4%, that is called interest on capital. Okay, so from 5 lakhs rupees capital we have to calculate 4% means 4 by 100. After cancel it we get 20,000 rupees. So 20,000 rupees is the interest on capital. Okay, what is the adjusting entry for interest on capital? Dated on, it is like a journal entry. Okay, date, particulars, LF, debit and credit. Adjusting entry means journal entry for the interest on capital. So dated on 31st December 2016 we have entered here. What is the journal entry? What is the adjusting entry for interest on capital? So listen here, the format of the interest on capital is interest on capital account data to capital account. So we have to enter the amount interest on capital account at 20,000 rupees. Okay, to capital account 20,000 rupees. So we have to transfer the interest on capital into the profit and loss account, like depreciation account, bad debts account. Okay, so like that here we have to transfer the interest on capital into the profit and loss account. The transfer entry for the interest on capital is, you have to enter here the same date, 31st December 2016. Profit and loss account at 20,000 to interest on capital account 20,000. Listen, where is interest on capital in adjusting entry? It is on debit side. When you transfer into profit and loss account, it is to be credited. Interest on capital is to be credited. The narration is interest on capital transferred. So each and every adjusting entry has two places in the final account. Okay, so interest on capital is the expenses of the business, because you paid interest for contributing capital to the partners, to the proprietor. Okay, so interest on capital is an expenses, indirect expenses, so it appears on debit side of the profit and loss account. So on debit side of the profit and loss account, indirect expenses and losses is appear on debit side of the profit and loss account. So interest on capital 20,000 is appeared on debit side of the profit and loss account, and it shows in balance sheet, liability side of the balance sheet. We have to calculate with the capital, because the capital calculation is, we have added net profit with the capital and interest on capital. We have to add interest on capital with the capital. Okay, then interest on drawing account subtracted. Okay, so with the capital we have to add interest on capital 20,000. How much capital is given here? 5 lakh rupees. So here capital 5 lakh rupees, add interest on capital 20,000, we will get 5,20,000 rupees.